Hey, good morning, folks. Welcome to Swing Trading Today. I'm sorry I'm late, but I had a pen explode in my hand, both hands full of ink, and it was kind of a messy morning here so far. Okay, so the um, the futures market this morning, we're holding a bid here on the Nasdaq. The Nasdaq, which we spoke about on Sunday night, had been flashing an inverted head and shoulders setup. This is a 1 hour chart. Here's the left shoulder, here's the head, here's the right shoulder. We broke out above the neckline on the NASDAQ, and it was an okay day today. The only reason why it wasn't a great day was because we pulled back off the highs of the day. More so on the Russell 2000, which I'll go to in a moment. But I want you to take note of this on a 1 hour chart. Very volatile, admittedly. 1 hour chart of the NASDAQ shows a lower high on RSI, despite the fact that we put in a higher high on price. That is a negative divergence. In the end, it may mean nothing, but being Sherlock Holmes investigator like, we take these little bits of information, we store them away. Look at this, we even broke down to new lower lows. We should have held here, and we didn't. We broke down. So just beware here. Let's see if it's manifesting itself on a 4 hour basis yet. I doubt it. Not enough data. As of yet, anyway. Well, we do have a lower high here. However, yeah, it does appear on a 4 hour chart. Here you have it. Here's your lower high on a 4 hour basis. So the NASDAQ is showing some cracks here very, very early on. And you could argue that we've broken down on a 4 hour basis. This is as of today. So in light volume, let's just keep an eye on a potential break here for the NASDAQ. Let's go to the Russell. Now the Russell under a little bit of pressure this morning. Here was the selling pressure into the close yesterday. And today, we really need to hold this support level here. And we're flirting with it at current. Now, if we break out, that's all good stuff. Then the path of least resistance will be to the upside. But last night, I spoke about the Russell 2000 in particular, along with the Dow transports with members, that what we were seeing on a daily basis was a lot of topping action. And as a matter of fact, it wasn't even limited to the Russell 2000 and the transports. It was expanded out to include the banks and several other indexes. And those topping tails on top of the candlesticks, or wicks, shadows, whatever you want to call them cupcakes, that's a sign of profit taking, a sign of selling pressure. You didn't see as much on the S&P 500, but there was some profit taking yesterday. I wouldn't ignore it. Let's take a look at the S&Ps. Hey, Patrick. You didn't? I'll send it over to you. Isn't that the one you sent me the email on, though? I'll check it out. Either way, we'll get it over to you, Patrick. Okay, so RSI, lower high, and breaking down. Not so much yet on price, but this is just a little bit of an indicator here that we may. You really don't trade off of this per se, and on a 4-hour basis anyway. But we may be seeing a little bit of topping action here on the S&Ps. As you can see, we broke down below this lower band of support with a lower high. Price is holding in there, though. Let's take a look at the dollar. All right, the dollar yesterday showed some signs of strength. Which is continuing this morning. But again, as we inch up towards this upper band of resistance here, at let's say 97.4 and change, you're going to see it become more and more difficult for the dollar to hold this rally. I bet that we are probably going to resolve this ascending wedge formation to the downside. This now becomes resistance, prior support. You could see that we were hit hard on the 12th post the UK vote, and we've since rallied back. I think this is a dead cat bounce on the dollar. And when we're taking a look at the dollar, we want to take a look at commodities, how they're behaving. Let's go to gold. Now, gold, 4-hour basis, it's broken out on a 4-hour chart. Now, we've been here before, right? We were here on the 12th, only to fail the next 4-hour bar. We were here again prior on the 1st of November. That's how long this trading range has been establishing. So the longer the trading range, the longer the consolidation, the greater the validation of any breakout. So we've flirted with this resistance level before. Rejection, rejection, rejection. Now it appears as though we may, just may, have a successful breakout. We won't know until 9 a.m. Eastern Standard Time if we have a successful breakout on gold. Now, yesterday, it wasn't my plan to do so, but going into the week, but yesterday I did sell covered calls against our gold mining position. So I may, in the end, need to... Mila, how you doing, brother? I may need to roll out. It's a defensive play. Roll out of my covered call position up to a higher strike price and out to a later date. Even if it's a break even, it doesn't matter. I just don't want to get taken out of my position. That assumes that our position in the NUGT trade continues to move higher, or does move higher. It did not continue. It was down yesterday. It moves up and through resistance levels. So while gold is pressing higher this morning, it's a positive for our gold mining play, but no guarantee that we're going to see an up day, much less a breakout above the upper band of resistance. So I'll show a little bit of discipline, but I'm going to want to stay ahead of that move, which is probable should gold close at or higher where we're trading at current. I don't care how we're trading in terms of price. I care about the fact that we close above this current support level. Hey, Sam, good morning to you. Yeah, the VIX took it on the chin yesterday. Closed out with what, a 12 handle? It was down with 11 handle, if memory serves me, on the lows of the day. Now you can see sellers just try to move in and take it down. Gold meaning. So let's allow for the current bar to close again at 9 a.m. Eastern Standard Time. Let's take a look at silver. Silver was up yesterday. A little bit of a stealth rally going on here with silver. 4-hour chart, stable. For the most part, flat. Looking good here. Bollingers are moving higher. So silver looking good going into the day. This is for Patrick in particular, Nat Gas. All right, so this is what I was afraid of here. And this is what I've been talking about. The price of Nat Gas were very, very oversold, and quite often you'll get a dead cat bounce. Traders will try to recapture prior support, as last seen back here on the 6th of December. Actually, that's not actually true. We did recapture it here on the 16th, but prior to that, on the 6th of December, gapped it down, limped it back up, did manage to recapture on a 4-hour basis, not on a daily basis, but a 4-hour basis, and then gave it up. So the question then becomes, do we put in a higher low from this low and recapture and proceed higher? Or do we retest this support level here and hold? Or do we break? If we break, we'll probably retest this prior secondary downtrend line. Let's turn this green, as it is now resistance. Actually, it's wrong line. All right, so the jury's out here as to which way Nat Gas is going to go. If you had to answer the question with a gun to your head, which way is it going to go? You'd have to go with the overall trend, which is to the downside. So the law of probabilities dictates that you would have to say, in all probability, if you had to hazard a guess, we would break this lower band of support. We don't know yet. We could be surprised. When do we know that our probabilities are under question? If we close above the highs of the 16th, which was at 2.377 on Nat Gas futures. I want to take a look at the price of oil. Then I want to take a look at Bitcoin and bonds. All right, oil is flat on the session. You could see that we had broken down here on the 11th. And what was prior support back here now acts as resistance. So what we're doing is we're pulling back, consolidating. And it appears as though we'll probably break to the upside. So the energy sector is in focus for us. We just turned flat on the session. I think that we press higher here on crude oil. Taking a look at bonds, I want to go to the 10-year. This is the bond price, not the yield. Okay, so this is why you're seeing a bid under gold this morning. We recaptured. God, this is a mess. Let's clear this up. Okay, better. This at one time was support. I drew that line a long time ago. And we have recaptured the support level. So the question then becomes, do we press higher from here? Let's just create new support and resistance levels. All right, so we're breaking out. Out of this triangle formation. So again, this would be the first bar closing above, if in fact it does close above resistance by 9 a.m. And that may imply that we press higher on bond prices. That means yields are pulling back. And that would put a bid under gold. As to Bitcoin, Bitcoin had a really rough day yesterday. I'm going to do some analysis on Bitcoin. There's a correlation, and I think I've mentioned this before, but I'll repeat it again. There's a correlation between Bitcoin and inflation. Bitcoin rallies and, in essence, trades with inflation. I use the Prings Inflation Index, and I'm going to show you an overlay, probably on Thursday night when we do Thursday night stock charts live. I'll show you the analysis that I did on it, and it's one of the primary reasons why we began building a position again in Bitcoin on this as recently as this Saturday. Now, the Prings Inflation Index, if you bring it up, it was very overbought. I expected a pullback. I saw the pullback on Bitcoin, so I decided, okay, we'll enter now with a pullback on the Prings because it was very, very overbought. Apparently, there was more downside to the Prings Inflation Index, and you saw it reflected in Bitcoin. And supposedly there's some Chinese hackers. I'm not even buying into the story per se. It just seems to me to be a story. There was some Chinese hackers out there that caused problems with Bitcoin at one of the exchanges. I would prefer to stick with the macro view, and that was some one-off story. And the macro view, which I could trace, is the correlation between Bitcoin and inflation. So I'll talk about that on Thursday evening. So please, if you're not currently a subscriber to the YouTube channel, please subscribe and join us on Thursday evening. There's a link down below in the video description area. It says VIP link. If you enter your email address on that link, you'll get notified 15 minutes in advance of when we go live, and you'll not be spammed. So have confidence that you're not going to be spammed. Moving on to, what else do we have up here? Patrick, you're big on the British pound. Let's take a look at how that's doing. All right, so no shock here that we've seen a pullback after this enthusiastic spike higher. I mentioned on Thursday evening, don't expect this to last. For that matter, I mentioned the same with regards to other currencies such as the euro. Here we spiked up, we gave it back. The euro in particular, I'm more bearish on than I am the pound. Given the fact that the probabilities of a Brexit are fairly strong in the coming couple of months. So we'll see. We've rallied back some, which is encouraging. So we'll keep an eye on the price action here of the euro and gold and the dollar. If the dollar does move higher here on euro weakness, they can move in tandem, and that's because of geopolitical risk. So don't be shaken out of a gold trade because you're seeing the euro pull back and the dollar rally. Gold and the dollar can rally in tandem for a brief period. You just want to make sure that the 10-year yield is pulling back. And I think that is it for this morning. Patrick, did you have anything you want me to go over? Patrick is one of our members. You got it. Okay. We'll do as we normally like to do. Begin with the higher level view. Monthly view. Now, I'll begin with, you looking for an entry? Okay. Thank you for that. We'll begin with the negatives. So, last month, of course, being November, we broke down below this lower band of support. And here I've drawn a horizontal resistance level, which at current we are flirting with in an effort to try to recapture. Let's throw those overlays back up again. And at current, we're being rejected. Now, I'll warn as well that our stochastics on a monthly basis are down below the 50 mark, and we know from past experience that when you have Stokes down below 50 and declining, rallies tend to fade. So at current, we're up on the month, so I would be suspect of the possibility of a sell-off by the end of the month. So I would need to be steadfast in saying that we really need to see a close above 46. Let's go to the high of the range. 46.44. And that acted as support back here in February. It acted as resistance back here in March, then again in May. So it's very critical at current resistance. And if we close above it, support. That would be good stuff. Just keep an eye on these Stokes, Patrick. Weekly view. Yeah. So last week, we flashed an outside reversal week versus the prior very bearish week. But the problem is that we sold off the highs of the week. This week, we gapped up higher. What's this, Sam? Haha, you are live in my TV. My family is looking at me in a weird way. That's the best. That's great. Thank you for that. You made my day. We popped up higher this week. We've given up some of those gains on the week thus far. So you can see that this support, resistance level at 46.44 is pretty critical. Stokes are looking interesting. We have the fast line breaking out on a weekly basis, but the week's not over yet. We're breaking out on RSI, but again, the week's not over yet. So I do have some concern here. I think the line in the sand here, Patrick, is we need to see a close above 46.44. That's the line in the sand. We'll go to a daily chart, but I want you to have this for reference. All right, daily chart. Again, you saw a pop higher on Friday, a reversal. Yesterday, a pop higher, but you saw selling at resistance. So again, we really want to see a close above this support level, currently resistance. RSI is looking good. Stokes looking good on a daily basis, but we want to defer, as always, to the higher level view of the battlefield. And that's your 60,000 foot view using the monthly charts. Then your 30,000 foot view using the weekly charts. And then drill down further. And that's our hierarchy. Let's drill down further. Let's go to a 2-hour chart. So you'll know when it's going to be an ugly week if that rally is not going to last on a weekly or monthly basis. If we break down below this support level here, okay. So we'll just watch this for the next couple of days. And that's what I would watch, Patrick. If we break below support on a 2-hour basis, in all probability, we will fail to recapture the support level. Now, if we manage to recapture this current resistance level, then we could revisit. But at current, I would avoid buying these shares because at current, what you'd be doing right now is hoping that we recapture when you should fear that we fail. So I would wait for a close above, what is it again, 46.44. Sorry, 46.44. And I hope that helps. And with that, folks, I'm going to call it a day. I'm going to wash the rest of this ink off my hands. And everybody have a profitable trading day. If you haven't already done so, if I could ask you just to click that like button, it helps me out with the YouTube algos. I'd really appreciate it. NUGT's popping. Figures. Yeah, Euro's popping now too as well. That means the dollar's pulling back. All right. Looks like I forced a trade on Nugget. Should have showed a little bit more patience there, but it's all good. We're making money. That's what matters. Thanks, Mila. I appreciate that. Patrick, you're welcome. Everybody have a very, very profitable trading day. Patrick, you may want to hold off on that. If you're gonna do it, wait. Try to go deeper out of the money, because if we break out here on gold, where is it? We could have a pretty phenomenal day on NUGT. Your call, but this is a pretty solid breakout here. And once we start getting up into the 1490s, then you start thinking about the 1500s, and I don't know, your call. But if it goes overbought intraday, it depends upon why we're in the trade, right? My personal opinion is that not a personal opinion. My personal reason for being in the NUGT trade is wealth accumulation based upon the share price appreciation, not income generation, right? So that's why I want to roll out of that current position. That's why I probably will. So assuming that you're on the same page as I am with that, I would look to seller covered call. If we go overbought on an intraday basis, I would look at the 3250s going out into next week, because 3250 is a resistance level. It's proven formidable in the past, and given the seasonality of the market, where you have a risk-on environment traditionally during Christmas time, you may just see some strength in the stock market, and that means backing and filling on gold and the miners, because there's just not enough enthusiasm. Once you get out into January, seasonality 100% of the time, so the past 6 years, has been 100% up for gold, and I don't know about the miners, but for gold anyway. So I wouldn't want to cap my upside gains. So going out into the next week, I would look at 3250s or higher. I would try to avoid the 20s. That way I'm not capping my upside gains. I may need to roll out into a January strike just so I could break even on the current position if it gets too expensive for me to roll out of and open up into next week. So that's my own problem, but I have plenty of other shares to hold on to. So hopefully I answered your question. You bet, Patrick. All right, everybody have a great day, and I will talk to you later on. Be well.